If you trade gold, understanding this mistake can save you a lot of money. Welcome to Pipsigram. Let's break this down. So the move started at this open close key level here, but then I still wanted something better, so I went down to an even lower time frame, which is the 5 minutes, was what I used. On the 5 minutes time frame, there is this very nice looking favorable gap, as you can see here, and I use the midpoint as my entry point. So it kind of looked like the missed entry here, but I was patient. I just waited, and price came, tapped the midpoints, and then started to go up. As you can see, very nice sniper entry right there. So from that point on, I wanted to maximize this setup and look for another entry to just like ride the wave, but everything here was already touched. As you can see, there is no favorable gap, there is no other block that is usable. The ones that are available, if you go down to the lower time frame, you see everything had been mitigated. See, it's favorable gap mitigated, favorable gap mitigated, other block mitigated. Every damn thing had been used. So if I had picked an entry, forcefully picked an entry here, I'd have gotten stopped out and lost money unnecessarily, even though it broke structure to the upside. So I just waited patiently to see if I'll get something else, and lo and behold, I got this nice looking move right here. So price went above this high right here, as you can see. It went above this high. I saw it on the 15 minutes, and it created this very nice favorable gap while doing that. So while it did that, I had two options. I had to use this other block here or to use this favorable gap, and I opted to use the other block instead of the favorable gap. And for the moment, it looked very nice because you can even see price was rejecting from this place. Let me remove this so it's clearer. So price rejected from here, as you can see the candles, and it's felt very nice, and it's even did very nice RR. I think this was about 5 RR if I'm not mistaken, maybe 4 or 5 RR. Let's see. Yeah, it did about almost 6, 5.8 RR. Then it came back after doing that and took me out without getting to the destination. That's the, I think, 4 hours favorable gap or something. That was the midpoint of that. That was my final profit target. So why did this fail? It's actually a very minute problem that most traders miss, and let me just show it to you. It's very simple concept. It's a concept of break of structure. If you look at this high, when price moved, it didn't close above it, neither did it get here at all. So it just rejected from here and came back. That was how I got my entry in the first place. That was how I got into the market. So this was not a strong POI because it didn't break the structure properly. It just swept and then came back down to pick me and then started moving with me. So that was exactly why it failed. No paparazzi. So what should you look out for next time? Before picking a POI, make sure it breaks structure properly. As you can see this entry here, it broke structure. See, it broke this guy before giving me this entry, and then it holds very well. So I later got another entry though from this guy, this move right here. So I saw this favorable gap, it's broke structure. I think it's clean on 5 minutes. So I got this guy here. As you can see, it tapped into it very nicely, and I was able to get another entry and to make up for the loss I had. Although it was a small loss because I didn't risk so much on that one, but then it could have been avoided if I had just remembered to apply that very simple thing. Just make sure it breaks above structure before you actually pick your POI. So no matter how beautiful your point of interest or entry or setup is, if the structure is wrong, it's going to fail. In the next video, I'll show you the structure model I use for my entries. If this helped you, like the video and subscribe to Pipsigram. I'll see you in the next one. Stay smart and stay sharp.